Great day, everyone. I'm your host, Paul Lawrence Van, host of Wealth Academy podcast. And of course, our mantra is wealth is more than just money. In life, we have a lot of other things that are important as well, but having money and finances is great too. We're going to have a wonderful show today. In this episode, we are going to be interviewing Spencer Hilligoss, and he's going to be talking about real estate syndications. I want to welcome him, and then, of course, as I normally do, I'll go over his bio. Spencer, how are you doing today, my friend?
I'm doing great, Paul. Thanks so much for having me. I know a little bit last minute on my part. Literally just got back from a plane, so thanks for bearing with me. Excited to be here.
It's worth the wait because it's priceless. We're glad to have you here because I know people in my podcast community are going to want to learn more about what you do, which is very important. Spencer is CEO and co-founder of Madison Investing, a real estate investing firm that specializes in real estate syndication. Now, here's Spencer's mission. It is to arm investors with the know-how they need to make confident investment decisions tailored to their life goals. But that's not all. Prior to pivoting in real estate, Spencer held several executive roles in the financial technology industry, working for Intuit, the company that we all have some work with, I know I do, and Gusto. Now, over the course of 13 years, Spencer built a track record of high-performing teams, over 5 companies, of which 3 were valued at over $1 billion. Spencer is a member of the 2021 Forbes Real Estate Council, and he resides in the beautiful Bay Area with his wife and his 2 sons. So welcome, Spencer, and we are honored to have you, my friend. And we are going to really get you to share some valuable information for all of our viewers, as well as our listeners and those who will listen on our archive. So inquiring minds want to know, what was the inspiration for you to become a CEO and co-founder of Madison Investing?
Gosh, that's a great opener. and thank you for the kind introduction as well, Paul.
Sure.
It started very organically. A lot of this was birthed out of really Jennifer and my own careers. And Jennifer Morimoto is my wife and my co-founder, my CEO. So, we had crafted our own 13-year corporate careers, or W-2 careers, totally different industries. And we were just focused on those, climbing the ladder, if you will, for so long. And ultimately came to a realization about 10 years into it where our net worth needle was not moving in the way that we wanted it to, And so I think ultimately we just started investing differently. And that investing shift for us personally led to a realization of, and frankly, an inspiration of, well, how come we're not seeing other people have the same spark, that we did? And that's really where, Madison Investing started for us. It was like, hey, if we could go back in time, what is the advice that we would give to ourselves? What would I tell to myself, 2 years in, 3 years into my career? I would have made a couple different decisions financially, 401ks, they have their role, of course, but I would say would have made a couple different changes in our own financial picture much earlier. And that was really the genesis of this, from a company perspective, Paul. It was, this is working for us. How can we go and serve others in a way that is actually helpful for them? And we had already kind of figured out how to do this a way that works well for us.
Oh, definitely. And you're absolutely correct. When a person is going through their career and they're climbing that ladder, oftentimes those ladders get wider and wider in order to get one step up closer to the top. But what you all have done, you all made that transition and you saw it early, which is making that difference now. But real estate is really a great way to do it. Now, you're a passive investor and active syndicator. And of course, you understand the challenges that a lot of busy professionals go through when they're starting on their real estate journey. What are a couple of the challenges that you find that people face on their real estate investing journey?
Ooh, this in and of itself, this one question could be an entire series, probably.
I know.
I will try to keep this concise, but you please keep me honest on that one, Paul.
Okay.
I'd say right off the bat, it is strategy choice.
Excellent.
Right off the bat, I would say I wish I could go back in time and think about the first rental property investment we made as an example. Knowing the difference between, am I solving for growth? Am I trying to hit a cash flow number? Or even, let's make it simpler and more high level. Does someone find this interesting to the point where they want to make this a part-time job?
Uh-huh.
Do they want to be active or passive? All of these things are key questions. And I look at, for example, we bought a duplex. We still own it now
Mhm.
in Vallejo, California.
Mhm.
And this is a little sticker shock for folks that are probably outside of maybe
Of
San
the
Francisco,
area, yeah.
LA, or New York.
Uh-huh.
But that duplex costs about $430,000 at the time we
Yeah,
bought it.
yeah.
And we didn't quite realize and piece together our goals that cash flow was a priority at that time.
Mhm.
Like we wanted to figure out how much passive income could come in. And that was going to produce maybe $200 a month in cash flow, Paul. And
Sure.
so I would not call that a home run
Right.
if we had understood the
Uh-huh.
implications of investing on a property like that. It's appreciating, of course. We're very pleased with that performance, but I would say that wasn't the intent. The intent was for cash flow. And so I
Absolutely.
want to give that one very specific example because if I were to use my fingers to indicate a spectrum in a very scientific way, of course,
Uh-huh.
um, the active passive decision is a very overlooked one. And
Mhm.
it's because this stuff can be overwhelming for folks, but it doesn't have to be. But just stop and think, do I want to go make this my job, whether it's a full-time or part-time in any form, not a hobby? Because if someone
Exactly.
wants to be active, they
Yes.
should absolutely go in expecting it to be a business decision. It is not a hobby. It's not a part-time thing. You're doing it for
Right.
fun. That's how you lose money,
Right.
is going in with that mindset. If you want to be passive, totally different conversation. You're going to have to
Sure.
trust and vet people, though. You got to figure out
Yeah.
how to vet people that you're going to be relying on in order to go and do a lot of that legwork for you and
Sure.
find these opportunities for you and a number of other different roles that they
Mhm.
could be playing.
And it's very competitive too. Very
And
competitive.
I mean, right
Yeah.
now being
Yeah.
most competitive,
Buyer's market.
very, I
Yeah.
mean, it is incredibly competitive.
Well, seller's market, but buyers are going to pay a lot more for what they want. Yeah.
Absolutely, yeah, and I mentioned I just got off a plane. And I was in Colorado for a whole day of
Mhm.
touring properties,
Sure.
and that is validating to see. There's just a
Mhm.
ton of competition out there that are fighting for very little inventory, if you will, of
Exactly.
properties that are available for purchase. So that is
Absolutely.
the most competitive environment we've seen in a very long time.
Yeah, yeah. I know when I first started buying my first property, I bought it in Texas for little or nothing. But from what I understood later on is that I paid too much for it. But over time, I actually doubled the value of it. So when I came out after the sale, I came out ahead. But it is a people business. Real estate is a people business. And of course, you have to be concerned about the property being destroyed, being deteriorating. It's a lot that goes into it. And I know when you're buying duplexes and apartments, it's even more intense.
Very much so. But I'm sure you are happy with how that Texas property went.
It was a miracle, Spencer. It was a miracle. And what's funny is that the neighbor across the street was renting an apartment and he saw the house for sale and he asked, could he purchase it? And I said, absolutely. And I sold it to him. And I was glad to because he
Yeah,
was, yeah, he saw it every day, right? So it worked out quite nice.
that's
When I
great.
had my little jaunt there working for Mobile Oil Company in Texas. So it was interesting. Now,
That's great.
Spencer, why is investing in real estate syndications an underutilized strategy by the busy professionals who want to grow their income? Why is it underutilized? I guess it's not the first thing they think of when they think about real estate investing.
Absolutely. I think one of those initial barriers that we found as well, personally,
Mhm.
because our business was created out of our own need and our own wealth plan that we now share with others and help them get into
Sure.
these things, right? So
Mhm.
we went through these three logical stages, and I'll just briefly touch on them. We bought a rental locally. It was
Yeah,
too scary to buy something far away.
exactly. Yes.
Huge mental block. It affected us. It affects others.
Sure.
We got comfortable with long distance, but we still didn't want to
Mhm.
go big, as it
Sure.
were, to larger properties. But we eventually bought some turnkey single family homes in the Midwest, and then long story short, we realized that was still more work
Oh,
than we wanted to absorb. It was more overhead, even on a rental property with a property
absolutely.
manager taking
Mhm.
their 10% every
They're
month.
taking that 10%. Absolutely. That
You,
happened to me.
and they still require management.
Sure.
That management of the manager is part of that deal, and so
It is.
that passive when rentals are referred to as passive investments, and I am a pro rental person. Like I think that great investing comes down to the word and not the word or. So this is not a binary thing.
Exactly.
But syndications, I would say, opened up my eyes to what it means to be actually passive as an investment vehicle. Um, and meaning the big disclaimer I will give, because I very frequently get into this friendly debate, is
Yeah.
oh, but you do work. It's not passive when you do diligence on the opportunity.
Uh-huh.
And to which I would reply, well, I sure hope you're not investing in any stock with the same
Exactly.
my mindset. I hope you're not
Exactly.
blindly, going into any form of investment vehicle across the board, any industry, any asset class without doing diligence. That's kind of an assumption
You
going in.
have to do it.
It's critical. But once we invested our own funds into these vehicles, like we were kind of surprised because there was truly all the work handled by the asset manager, or AKA, the very distancing terminology for first timers in the space would be, the sponsor, the people managing the deal, the
That's
operator, the general partner, all of which typically mean the same thing.
right.
That is really where it comes down to the key value is you're able to benefit from investing in a hard asset that is a real estate, it's a piece of property. And you can participate in bigger and bigger properties that have their unique benefits compared to like a single family home.
Absolutely.
A 400 unit apartment community,
Mhm.
if one person in that community stops paying the rent, you still have 399 other people that are paying that rental income. And
So
so
the leverage.
that's right.
Yeah. And of course, on that tax form, when you're filling out the form, it asks, are you an active investor? Or are you a passive or owner? And so that's another aspect a person have to consider about the tax aspects for sure.
Absolutely. Yeah. I mean, I'm always obligated to say, of course, none of this is tax advice that I will comment on here. But
Sure.
please talk to your CPA. But yeah, I mean, I think if people are willing to, or interested in willing in pursuing the path of being truly active, like getting involved, making decisions about the properties and spending a significant amount of time doing this stuff, then there are very key advantages for that. To your point, Paul. Absolutely.
Sure.
I love that topic. I don't want to bore people on that one too much because I can.
I have a business and tax background, worked in a tax accounting office for a corporation before. And if you learn all the intricacies of taxes, you can do a lot of great things with investments for sure. Yes.
Agreed.
Yes, stand within those limits, of course. Now, one of the things I know listeners and viewers want to know is this: does real estate investing lend itself more to one industry over the other? Is there a big difference, or can anyone use it to their advantage regardless of their background and skill set?
I'd say that real estate does not, discriminate in terms of your background, right? In terms of how advantageous it is as an asset class.
Exactly.
I didn't fully grasp those benefits as a guy who grew up in a real estate household. I mean, my dad was a broker for 30 years, as a brief aside, Paul, and I will just say that I was working in
the business.
Teenager.
Yeah, he knew the business then. That's really great.
Yeah, but I was too immature and perhaps too dense at that moment to reap the full benefit. Obviously, I was a teenager that thought that working in tech companies sounded a lot cooler to tell my friends.
Exactly.
And so at the time, though, I will say that I at least realized that there was something there I would circle back to at some point. And so no, there is no background, I would say, that would be ruled out from wanting to consider it as part of their overall portfolio, because it's when people say proven asset class over a long enough time scale, you can do things that are fairly reliable. And you just have to be thoughtful and plan and really work with people that you've vetted and you consider them trustworthy because you have some evidence of that.
Exactly. And especially when we consider the pandemic, that of course the government allowed people to, they didn't have to pay their rent or on their mortgage for say 90 to 6 months. And so that created a problem for the owners and the ownership groups as well, because they had a moratorium where they didn't have to go in and pay. And I know that caused a lot. You still have to pay for the building, even though you're not receiving the payments. That's got to be tough.
Yeah, I mean, I'd say that no one expected a global pandemic. That's for sure.
No, absolutely.
I think one of the insights that a lot of folks might find helpful about just the category of real estate overall is many of us discuss it, and I was very much of this mind for over a decade, where we hear about, is the market up? Is the market down? Is the market doing whatever? And that actually, it doesn't really do it justice, because there is no such thing. I mean, this might be contrarian to some folks, but I would say I do not believe there is such thing as the real estate market.
Sure.
There is not a big object or vehicle that is moving that way. There is a bunch of individual markets and submarkets in different parts of the country, and they happen to move together over broad strokes. However,
Exactly.
Even within apartment buildings, to your point, Paul,
Absolutely. Yeah.
you've got A class, B class, C
Yeah.
class.
Yes. Yeah.
I
You
mean,
have trailer homes,
yeah, I mean,
mobile
mobile home
homes,
parks, like
mobile home parks.
manufactured homes,
Yeah.
storage facilities. And to your
Mhm.
point, though, like even through coronavirus in 2020,
Sure.
it was a scary moment where everyone thought, oh, the world's going to fall apart. And the world has been and still is deeply affected by this real time. So it's not gone
Sure.
yet. But
Exactly.
C class properties, AKA workforce housing,
Right.
people who are living month to month typically, they
Yeah.
have relied on that on stimulus in
Mhm.
many of those buildings. And I think some
Yes.
folks who invested thoughtfully up front, they
Uh,
made they de-risked it as much as they could at the buy up front.
exactly. Yes.
They are in a much better position than the folks who
Mhm.
went in and overpaid and didn't have a plan to force appreciation to that property, to add value to it, to mitigate and have frankly, to have cash reserves to navigate through
For sure.
a challenging time.
Absolutely. Yeah. That's quite a transition in that the whole market itself, or real estate itself, is very dynamic, and it does react to the market. If a person not working, we have what about 5 million jobs being offered, but they can't be filled. People have changed their mode of operandi in terms of how they're going to go about their life. And of course, having a roof over their head is one of the most important things, along with the health and being able to eat. So I know with real estate, it gives those busy professionals now an opportunity to even start a business coming out of this pandemic for some of them.
Yeah,
So,
I mean, the term that I heard recently, and I know it's become popularized in a
mhm,
big way now, is
sure.
the Great Resignation.
Yeah.
And
Great
so
resignation.
it is remarkable how
Hmm.
certain geographies, certain markets, certain submarkets,
Yeah,
they are looking in some cases far more favorable
for sure.
from a real estate, a real estate values perspective and
Uh-huh.
even investing perspective, because people can work from anywhere for some of these companies, whereas they would have been in an office previously, even just a year ago. So
Mhm.
those dynamics are still playing out. I don't think, I mean, I try not to declare that I have any answer for where that's going to land, and I don't know if anyone truly can.
Yeah,
But
still
it's
yeah,
driving,
kind of a
it's
new
improved
normal.
performance for some.
Absolutely, absolutely. And in terms of syndication, real estate syndications, were there any significant pivots that you were able to see over the course of the last 18 months?
In terms of asset class or
Asset
performance.
class. Uh-huh. And performance, yes.
Yeah, I think that definitely went and looked for a couple other asset classes to complement our focus, because we've been very focused on apartments and multifamily, large multifamily. So
Yes,
for folks in the audience, that would mean 100 plus units.
exactly.
Yeah, like 200, more typically like 150 and up.
Yes.
But I'm a
Mhm.
fan of predictability
Sure.
wherever I can find it, Paul.
Absolutely.
And
Yeah,
as a former operations guy, and
uh-huh.
I just really like a good forecast that you can at least try to get close to hit. Uh,
Absolutely.
so I was drawn to storage. I think self storage
Mhm.
is a really interesting asset class.
Yes.
And so we've done a number of those types of deals over the past 18 months, and so that's been really fun too, because a couple key advantages there would
Mhm.
be, I mean, in a non-climate controlled storage unit, if you
Yeah.
think back, if I don't know if how many folks can remember, in spring of this year, you had
Uh-huh.
Texas went through a very significant deep freeze, right?
Yes,
And
my brother went through that one.
oof, I mean, really, truly, like deeply impactful for a lot of people, and kind of my heart goes out to them during that time. And I was
Oh,
texting,
yeah.
calling some folks who were really feeling it.
Mhm.
All that said, there's no pipes to break, and
Yeah,
no frozen pipes in a non-climate controlled storage facility, and ideally, there's no one living in the units.
exactly.
So, those
So
types
that's
of things are
more
key advantages.
risk averse.
Yes, yes.
Yes,
I mean,
more risk averse. Uh-huh.
yeah, and of course, a lot of these deals and syndications you'll see out there these days, and most of the ones that we've ever worked on, have had a value add component to them, and
Sure.
that can mean that means so many different things to different people. But in essence, it just means you're going to force appreciation for the property once you buy it via renovations and improved management. And
Mhm.
so, some of those things, I mean, some properties like a storage facility, you might not even renovate it that much, might repair and just improve operations.
Exactly.
Apartment building, you might buy it, heavy renovation, heavy lift,
For
and
sure.
then improve performance. So it just depends. But other asset classes too have been affected. Senior living, a lot of folks really find that to be a compelling asset class, and I get why. But it's also a bit of a moving target as to where COVID is going to land, so we haven't gone there as much. So I could probably keep going.
No problem. So, Spencer, thank you for that. And one of the things I want to ask you is for a person who's out there right now and they've saved a bit of money, they have some money sitting out there in the bank account, it's not doing much, they need to move it and build on it and let that money grow. Please share why people should go into real estate syndications to invest in it and to go in it from an ownership perspective as well.
Yeah. So I think of it in a very simple way. It's tough to find investment vehicles that offer growth, meaning everyone knows growth. If they're a stock investor, you buy something, it increases in value, you sell it at a later time. Cash flow.
Yes.
Cash flow, I would say, is the primary reason that most people are initially drawn to these, is because they produce monthly, sometimes quarterly, but now more commonly monthly distributions.
Okay.
And those distributions are meaningful typically. And so getting both growth and cash flow in the same investment vehicle is frankly kind of hard to find in the same way that you can do it with this type of investment, particularly for retail investors. For folks who are not necessarily living and breathing as an active investor every day, that was exciting to me as an investor, as a limited partner or an LP, which is basically the agreement name and the contract if you're a passive investor in these things.
Exactly.
But it does those things. And in addition to that, I would also just say, without overstating it or getting too excited, I would say, to your point, Paul, from earlier, there are benefits for at least making some of the cash flow that is received on these investments tax deferred, or at least a significant portion of it. So it benefits from some of those things as well. So it's those three things: it's growth, cash flow, and some tax efficiency.
That's a great trinity.
Yeah, I agree.
That's really great. I like that. Well, let's shift just a little bit here, and I would like for you to share. I want people to know you live in the beautiful Bay Area of California, great state. And what was it like to play on stage in San Francisco at the Vans Warped Tour? What was that like?
Oh man,
tell us more.
So it might not be obvious to folks at first, because of the collared shirt and the business-like discussion. But I would say I have played in quite a few punk and metal bands in my life, and been playing guitar for 25 years. So
great.
That era of life was a lot of fun. My audience is primarily my two kids these days, so I don't play this type of music.
You have a great audience.
It's like Wheels on the Bus primarily these days. But yeah, it was a blast back in, gosh, it was like the 2000s. Yeah, we got to play on Warped Tour locally, and it wasn't necessarily like the biggest stage, but it was big enough for us. So we used to play gigs around the Bay Area. Still try to get into play some music now, but the collared shirt hides some of the tattoos, so that's
okay. That's okay on
that front.
Yeah, and so you're a metal fan, and you also have a tattoo collection. So, what do your sons say about your tattoos? They like them?
It's just what they've known about Dad. I did get the question recently of, hey Dad, can I have a tattoo? And then I'm either the artist, the artist who gets to draw it on him, or it's a temporary. But frankly, no one wants to emulate their parents for the most part. So they'll probably end up getting zero, because they're going to say, we're going to do our own thing.
Exactly. All right. I just wanted to get that in because, like I said, wealth is more than just money. We have to live. You have beautiful family, beautiful wife, two beautiful children, and letting people know that with that, you have even more when you're looking at the real estate syndications. So it's a complete person, the whole package.
Yeah.
So, Spencer, one of the things I want to talk about now, because our interview is coming to a close, if there anything else you would like to share at this time, how people can contact you, reach out to you, and learn more about syndications. Do you offer any programs, online courses, or any webinars that's involving real estate syndications as well?
Oh, I appreciate that, Paul. So we have a website, MadisonInvesting.com. So it's MadisonInvesting.com. And folks can sign up for a monthly newsletter there. And if they want to learn more about our group, it's a passive investing group. We are only taking right now accredited investors. So Folks can always book time with me though through our website.
Yes.
I also share, and you already know this, Paul, because we've been commenting and interacting on LinkedIn. But LinkedIn as well. I try to do a few posts a week on LinkedIn, sharing education on that front as well.
Yeah, I've been following that. I'm going to follow it more. And yes, I understand if you can share a little bit about the accredited investors. I used to know what that meant, but it's been a few years now. If you can share that with people in case they want to try to position themselves to arrive there.
Yeah, absolutely. And I think it is actually very commonly overcomplicated, and it really doesn't have to be. So this is a requirement that you don't need to rush out and get a certificate for. It just means that the SEC defines an accredited investor as either someone who meets a certain income threshold or a certain net worth threshold. So
that's how I know it.
Yeah, and so to keep it very simple for folks, it's if you're single and you have made over $200,000 in the past 2 years, and then you expect to make that this year as well, you are an accredited investor. On the net worth front, less common, but if folks hit $1 million in net worth, not including their primary home, then they're an accredited investor. You don't have to hit both; you just have to hit one. And it did. There was an official update to that status in, I think, December. It was like late 2020. There are a few licenses, professional licenses that also can help someone count as a accredited investor as well.
Well, that's you said it exactly. That's the way I remember it when I first learned about real estate investing.
It hasn't been updated very much.
Yeah, that's how I remember it. And for those who are out there and you're in that category, I think the person you should talk to is Spencer Hilligoss. He can help you out, and that would be a great thing for sure.
Thank you, Paul. Yeah, and I think as a side note for folks too, a very common question I will get on the accreditation front, and whether you reach out to us or anyone else out there that works with accredited investors, don't rush out and go and get verified unless you are sure you want to go do something with that verification, because it has a shelf life. So your CPA can do it for you if they're open to it. So some are, some aren't, but there's actually really easy to use online verification services these days. We partner with one as well. We typically help our investors with that.
Fantastic. You heard it here first, people, from Spencer Hilligoss. And again, Spencer, thank you so much for being our honored guest today. And you talked about real estate syndications and your journey, and then how other people may consider positioning themselves to do the same thing, working with you and are learning more from you. And of course, Spencer is out there on LinkedIn and other social networking sites and social media sites. And so I want you to connect with him. Again, his website is www.madisoninvesting.com. So Spencer, thank you so much for being our honored guest today, and continued excellence in all that you do.
Yeah, thank you so much, Paul. This has been a blast. I really appreciate you having me on.
Okay, fantastic. And I'm going to close out this show by saying, see, for all of our viewers and listeners, this is another option that you have at your disposal. Looking at this particular opportunity, it can really help you out, whether you're passive or you're active. Real estate syndications is a great way to do it. And this is going to end this particular episode with our honored guest, Spencer Hilligoss. And I thank you all for your time. Go out there to Apple Podcasts and rate and review this particular episode, which is episode 148. So thank you all. Have a great day, and I'll see you on the next broadcast of Wealth Academy Podcast. Have a great day, everyone, and continued excellence in all that you do. Have a great day, Spencer.
Yeah, you as well, Paul. Thanks so much.
Okay, thank you.